All right, welcome back, ladies and gentlemen. Welcome back to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everyone?
Man, oh man, this market have thrown everybody on a loop again. That is some craziness that we've been seeing. S&P went from, I think it was like 6,800 to over 7,000 in like a week. We hit all-time high and surpassed all-time high, which is craziness. Most of the stocks have hit a low and they just bounce from there. If you guys look at some of the stocks that kind of, if you kind of look like the previous month, I feel like that's what all the levels kind of everything kind of jumped. It hit previous month low and everything just kind of like swap from there. But let's talk about this, man, because it seemed like the market is just not even caring about the war anymore, or I don't know what the situation is. But let's touch base on that, man, and see what exactly is happening, because I think a lot of people are confused right now.
Yeah, so let me just put this in perspective. So remember when we breached the 50-week moving average, right? Like that was what, 3 weeks ago where we
Weeks.
did that?
Yep.
And we're talking about an event that has only happened 5 times in 10 years. So it's a pretty big deal when it happens.
Hmm.
And 4 out of the 5 times it happened, the market sold off even further. There was only one instance where it only stayed there for a short while and then rebounded. Well, now we've got two instances where that's actually happened. So,
Crazy.
from a technical standpoint, all the technicals that were showing bearishness, we've recovered. We're above the 50
Hmm.
week moving average. We're above the 20-week moving average. We're above the 200-day um, simple moving average on the daily chart. So, from a technical standpoint, the everything looks bullish. But from a conflict resolution standpoint, I don't, I guess what the market is saying is as long as things don't get worse than what they are, then it doesn't have any issues.
Right.
And when the United States announced that blockade over the weekend, we saw futures sold off. And then all of a sudden, it recovered everything back in one day. And then
Right.
we've seen this monster move to the upside. So on a positive note, maybe the conflict has not escalated, which is good. Um, it looks like they're talking about, you know, at least they're having discussions, which I guess is good. Oil has come down, natural gas has come down. So I don't know. It's one of those things where if I'm not an expert on global conflict, but the market has pretty much shrugged off every global conflict in the last what,
So far,
5 years?
5 years. Yep.
Ukraine, Russia, shrug off. Iran, Israel, shrugged off.
Hmm.
U.S. bombing Iran's nuclear plants, shrugged off. And now we have a conflict where the U.S. is directly involved,
Yep.
and the market has said, "I don't care."
Yeah.
So I can't explain it. I don't know. Now, will I say that we're out the woods? Like I said, I'm not an expert on global conflict. I have no idea what's going on over there. I don't
Right.
know what they
Right.
talk. I don't even know who's talking or what they're
Who's
talking
talking
about.
like what they're saying? Like nobody knows.
I have no idea. So at least what I'll say is the market is in a place, and I think I said this in our investment group, where we have gotten to the point where no news is good news. As long as we don't hear nothing,
We're good.
as long as we don't see no tweets, everything is all
and,
good.
and that's and that's the problem too. Like this whole market can come down with one tweet. And that's the craziest thing about this. I mean, if you look at it, we're a lot of those stocks that we're looking at, they kind of hit like last month high, and that's where they're kind of stopping at, right? So if you start looking at some of those stocks that were moving a lot higher, some of them did hit like last month high and retracting a little bit. But overall, like I was saying, one tweet, that's all it takes for the whole market to
Hmm.
come back down, or one somebody bombing somebody somewhere, or somebody's in violation of a deal or something
Hmm.
for this
Yeah.
whole thing to just come back and collapse again. Now, would that
Hmm.
happen? We don't know yet because I think everybody who's involved in this war is starting to realize like it's better to have a deal than not to have a deal because it is starting to impact everyone on a global scale. So now
Hmm.
everybody's invested. It's not. always some distance war somewhere. Like everybody who moved oil to that Strait of Hormuz, everybody's getting impacted. So of course now you have not just the U.S., not just Israel, not just Iran, but you have the entire Europe, part of Asia, a lot of part in Africa. All of those people are getting impacted by what's going on in that region. So yeah, I think everybody is in a place where they're pushing toward a deal. So I don't think this is going to escalate further, and unless there's something crazy come out of there somewhere. Like it has to be like something crazy for this to get escalated even more right now.
Hmm. Yeah. And like I said, I'm not going to sit here and say that this is a fake bullish move or I've been seeing a lot of people online talk about this is a dead cat bounce and all that stuff. From a technical standpoint, I can't agree with you there. Now, could the market come down? Absolutely. These are the things that I would say could bring the market down in a big way. Number one, whatever's going on overseas gets worse, right?
Yep, yep.
That's one thing. Number two, we're in earnings season now, right? So if
Hmm.
some of these big companies don't deliver on earnings, that could also prove to be something that, brings the markets down as well. So, I'm not going to sit here and start celebrating like everything is all Gucci. Like I said, I take this move with a grain of salt, but if you would have told me we'd be at all-time highs a month after starting a war, I would have drug tested you. Simple. I would have
Yeah.
drug tested you. I would have
Yeah.
told you. I
We'll
would have
say you're
been like,
crazy.
I would say crazy. Like a
Yeah.
month later, mm, that's a little bit of a stretch. But I mean, this is almost like the same playbook from last year, right? We saw
Hmm.
that nasty drop in March
Right around the
and
same time.
right around
Surprise.
right around the same time. And then next thing you know, we see a complete
Massive move.
recovery.
Yep.
So if you've been sitting in cash or you got out of the market, dang, it sucks. This is why I
Yeah.
keep saying people, stay invested. You know,
Yep.
I would have I wouldn't have pulled out of the market, but I would not have been an aggressive buyer either. I'll be honest with you.
Right.
I would have
Right.
been I would
Right.
have been buying in bits and pieces. I wouldn't have been an aggressive buyer
Yep.
because, like I said, this type of move. Now, I will say this though. This is another thing that you also have to take into context with this move. This is not a broad rally. This is a rally that's very concentrated in high beta, high risk stocks,
Yep.
mostly technology. So you always have to take that with a grain of salt. When you see a rally that is, you know, more broader leadership, right? Where you see more sectors and things like that participating in the rally, then I would say I can trust it a little bit more because the RSP was only up 0.04%.
So not
Point,
everybody's participating.
no,
Hmm.
0.04%. RSP has not made an all-time high yet. Now, could it possibly at some point? It is possible.
Yeah.
It could eventually start to catch up. But just know that this is a rally that has been led mostly by technology. You just have to understand that it's very, very concentrated. So,
Right. Right. Right.
yep.
Well, overall, like I said, this is a huge surprise to a lot of people. Like nobody thought the stock market is going to be doing this crazy numbers at this time. Right? So it's like to see us rebound like that, it's been an insane move. But overall, if you have stayed tuned, if you have stayed within the market, you would have seen the signs in the past couple of days and couple of, and that some type of movement to the upside was happening because we will start creating a little higher highs on the lower time
Mm,
frame. So you would have paid attention, like, okay, it's time maybe to start looking at some of those. Another stock that I was able to catch was Microsoft. Microsoft moved really nice today. Another one was, we talked about Tesla a little bit. Tesla was up like crazy today. So there were some opportunities out there. If you would have, if you stayed in the market and kind of like see exactly what trajectory some of those stocks are moving, you would have been able to caught some of these. But overall, man, great move. If you caught part of those moves and you're able to make money off it, amazing. I hope some of you guys caught SNDK. That's something that we talked a lot about. MU actually was moving like crazy. AVGO was moving like crazy. So a lot of stocks that we actually mentioned have been moving crazy. Two that I'd be crazy if I don't mention them. Intel and Oklo. those two have been moving too like crazy. For the past week, I said at least this week, Intel have got a buy rate for like I think it's like what 90 or something like that.
Yeah, I
It was
think I
a
saw. I think the highest on the street is a $90 price target.
Yep. And you see they actually ran up a lot, they are hitting what 65, high 65 today.
Yeah, high
That's
was
crazy.
65.84,
That's crazy.
and this was
20,
a $40 stock at the end of March, and it was a $20 stock when we
at the
started
beginning of the
talking
year.
when we start talking about it. We said
Mm-hmm.
that they had the potential to really really start to turn things around. We saw some of the steps, so
Yep.
start shedding some of the fat. Obviously layoffs did occur as well,
Yep.
but eventually they have turned it around. Now I will say this: they're not out the woods yet. They still got to deliver on a
Gotta
lot of
deliver those
things.
things. Yes.
Yeah, got to deliver on a lot of things. So because we saw what happened with the last earnings report, it sold off tremendously, and now it's recovered because they're putting
Mm-hmm.
things in place for moving forward. So hopefully they can keep the momentum going because I have been very optimistic about them hopefully being able to turn things around at some point.
Yeah. Yep. Absolutely. Well, speaking of nuclear energy, I mean, we talked about a little bit about the report from Bank of America. So basically, Bank of America came up with this report that says that they view nuclear energy as a $10 trillion industry opportunity and a critical solution for surging global electricity demand driven by AI and data centers. At this point, I think everybody's playing catch up to the thesis we've been talking about since last year. Like, I don't even know what to say, man. I swear, like they are taking our thesis word for word,
Word for word.
verbatim. You know what did Soldier Bell say? Bar for bar.
Oh,
They're taking
definitely.
it bar for bar, man. Like literally, it seems like they just listened to us and just went ahead and just. I mean, they mentioned SMR, they mentioned uranium, they mentioned like nuclear energy and how long. It's just they mentioned all the things that we talked about. It's crazy, you
So
know.
let me go back. I need to go back to my investment group Discord and just let me see the date. So if I scroll back far enough, let's see. My thesis that I wrote to my investment group on SMR technology, I wrote it on February 10th, 2025.
Mm-hmm.
I wrote a whole thesis about I believe that this is the industry that will help deliver the power need for the AI build out.
Yep.
And if you look at basically what Bank of America said, let me go back to some of the notes that I put on there. Again, I think Billy has stressed this enough. The AI build out is no longer a chip story anymore. It is a
Yep.
power story. And we've said this the grid can't handle it as the demand is growing.
Yep.
The grid, and you're also starting to see states pushing against data center build outs because their residents' power
Complaining.
bills are going up.
Mm-hmm.
We haven't had that issue here in California, and I think the main reason for that is there's nowhere to build a data center in California. Like
Mm-hmm.
we don't
Mm-hmm.
have a land, period. But states that have a lot of land, people are starting to say that their energy bills are going up, and some legislators are saying, you know what, you can't build data centers here until we find a solution to deliver power that's off the grid.
The grade.
And they're looking for clean energy, right?
Mm-hmm.
So solar can't provide 24/7 energy, neither can wind provide 24/7 energy, and these data centers run 24/7 nonstop.
Right.
So, how do you fill that gap? Nuclear energy. And you've got a couple of names out there that are kind of trying to get a product that they can commercialize and sell to meet that demand.
Yeah.
And I mean, we've been beating Aqua into the ground, man. I mean, since it was
$5.
like $5. And then everything just kind of lined up as far
Yep.
as what we saw early on. And I mean, yes, the stock is off its highs. It's way off its highs.
Way, 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 way off.
It's way off its highs. But I mean, if you would have got in at like 20 or 30, you still be in a good place right now.
Yeah, you would be in a really nice place right now.
Yeah, and I think, again, as far as timeline is concerned, there haven't been any major setbacks on their timeline. There was a setback in the last earnings call that I did read about, but
Hmm.
so far everything is moving the way it needs to move. July 4th is a key date for them to get over another operational hurdle. So we'll see what happens on that date. But the fact that we're starting to see, analysts and stuff kind of follow our story is just so funny to me because it's literally verbatim of what we've been saying. So
It's
if you've
not the
been
first time, by the way. This is not the
no,
first time.
if you've been rocking with us for the at least for the last year, you would have captured this opportunity big time. So
Big time. Yep.
yeah, this is it. It gives me more confidence in staying in the story. Now, again, this is why you got to listen to these earnings calls. If something operational happens where they aren't able to deliver their product, then that changes the whole dynamic of what we believe in. But so
Right.
far, things have been moving, you know, as expected. So we just got um, to me, I think you just got to believe in the story. Now, there's another company that is also going public, preparing for an IPO. And let me give you the name of that company. Give me 1 second. X Energy.
Mm,
They're targeting a multi-billion-dollar IPO of about $7.5 billion valuation. They're backed by Amazon and they're a nuclear reactor developer.
mm.
So keep an eye on that. And this is a company that's
That's a good one.
backed by Amazon. So we'll see. I really think that this is something that everybody should know now. And if
Yep.
you haven't heard it, you've
Yep.
probably been sleeping under a rock.
I also find it interesting that a lot of the big tech are actually investing in those nuclear companies. I mean, a lot of
Mm,
them are actually in the forefront of being one of the biggest investors in it. And I think because they also see value not just in the product they're making, but also value in controlling the energy part of how that product is actually being used, or
correct.
what actually what actually drives that product, right? Every single one of those companies, Meta, Google, Amazon, they all are recognizing that we really need to be in the forefront of this. So instead of you going
Hmm.
around and renting um, energy from somebody else, why don't you just be a part owner of that energy and, hopefully to get a discount and also make some money off of it too. So I
Yeah.
think that's the biggest play here. Instead of you just making the food, why don't you just own the land too? Like,
Yeah, that's true. Yeah, pretty much.
so
Because didn't Google buy a power company earlier this
yeah,
year?
yeah.
Yeah, yeah. So
So that's a really, really powerful play. And for them to be making those moves alongside investing in AI, they recognize the huge need for energy. And if they
yeah,
recognize that, you just have to follow the big boys, where they're investing their money and build a thesis off of that and then be able to follow from there. And that's basically what we've been doing. Like we've seen where the money is going, we've seen where the potential problem is, and we've seen who has a solution. And that's
correct.
literally is what we're focusing on.
Yep,
So,
yep. And that's pretty much what investing is. It's
yep,
looking for companies that are solving real world problems,
yep.
right? And when we look at this whole AI build out thing, I think the biggest thing that you just have to sit there and realize is, again, I don't care how many chips you have. I don't care how fast your GPUs are. I don't care how fast your network is. If you ain't got no power, you got nothing.
Mm-hmm.
Like that's like, let's just say you bought a Ferrari, you got it in your garage. If you don't got no gas, it's useless to you.
You going nowhere.
Not
You
going
going nowhere.
nowhere. So, and to me, that's the biggest bottleneck in this whole thing is power. And, you know, I hope that people are realizing that and putting themselves in a position to benefit from that build out.
Mm-hmm. 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 Well, let's shift gears a little bit, man, because I know everybody kind of being focused on the big boys in video when it comes to AI and all this stuff. But are we starting to see some strength in the software side of things? If you guys remember, one of our biggest theses also coming into this year is maybe because software is not affected by tariffs, they might be able to show better strength. I mean, that kind of we haven't really seen that move a lot. I mean, Palantir, maybe a couple of those other ones, maybe did some good stuff, but it's like we haven't really seen software really, really, really move the way they're supposed to move, how we
Hmm.
think it's supposed to move. So is this the time now that software might be seeing some strength? I mean, we look at companies like Oracle is doing really good, Palantir now, I think Salesforce is one of them. Like some of those companies are, starting to show a little bit of strength also in their move. So let's touch base on that, man, because I'm really curious to see if that thesis that we kind of came out with before the year started, if that's actually going to hold.
Yeah, so one of the things that has hurt software stocks is Anthropic. Every time Anthropic drops some sort of new product or new, coding thing, every single software stock has gotten obliterated.
Mm-hmm. Mm-hmm.
And even a Teflon company like Microsoft has not been, exempt. Microsoft's been hit, CrowdStrike's been hit, Palo Alto Networks has been hit, ServiceNow, Workday CRM. If you are in the software space, you have gotten clapped.
Mm-hmm.
Now, this week, we are starting to see that some companies are being bought. And on a broader discussion, I saw some pretty interesting trades that came into the IGV. The IGV is a
Mm-hmm.
very basically, it's a software ETF.
Software TV, yep.
And I saw some big institutional buys going out to December of 2028 for the 90 strike on the IGV for December 18th and the 85 strike for the IGV. And we have been seeing, I mean, I'm talking about a couple $1 million going in here. So it looks like institutions are starting to get um, aggressive with buying these names. And the top 10 holdings in IGV are Planeteer, Microsoft, Oracle, CRM, Palo Alto Networks, Intuit, AppLovin, and CrowdStrike.
Yep.
So it's a mixture of like, cybersecurity with some regular software and stuff like that. So when I started to see that, I'm thinking in my mind that that whole thesis about software is dead and Anthropic is going to clap everybody. I just don't think it holds.
Something's brewing, yeah.
Yeah, I don't think it holds. Um, we've said that if we were to choose a sector in software to be a part of in this, it would be cybersecurity.
Cybersecurity, yep.
And if you look at some of the names that have performed pretty well over the last couple weeks, Palo Alto Networks and is probably one of the better names out there that I've been a part of. And I think after their earnings call, when they dropped to like 130, I told everybody in the Discord group, I was like, this is probably a good time to start scooping up some Palo Alto Networks. And
Yep.
so far, you know, it's been holding, but I always say that it's you still have to deliver moving forward.
Yep.
So
Yep.
I like the business, Palo Alto Networks business. I know they spent a lot of money acquiring, I think it was CyberArk, so that did kind of hurt them. But I think long term, I still think that cybersecurity is where you want to be if you're going to be in software. Planeteer is another good name. I literally was texting this last week when Planeteer was 125. I was like, Planeteer looks really attractive at this level. And
Mm-hmm.
the next thing you know, Mr. Trump tweeted Planeteer, put the ticker in a tweet. Boy, that stock just,
Yeah, they just shut up.
and now it's at 141.
Yep.
So we got a $20 move in like a week, in less
Yep.
than a week.
Yep.
So,
And the way I'm looking at it, we just blasted through that previous month low. So
mhm.
we are going to tackle that previous week high, which is at 156, I think. And then after that, the previous month high is 162.40. So I think those are the next levels that we're probably gonna kind of hit.
Yeah. Yeah, I don't see any big resistance until like the 150s, at
Yep.
least for right now. Once we get past 142, 143, 144, yeah, it looks like from a technical standpoint, the momentum will continue to push to the upside. But man, I'm just like I said, I'm surprised that a lot of people have been buying into that whole thesis that all software is dead.
Yeah. Yeah.
I can't even. That's just
It's
something I never believed. No.
it's just a scary thing, you know. It almost remind you of when what is that China thing that came out and
Oh,
it just
DeepSeek.
Yeah, when DeepSeek came and everybody just panicked. You know what I mean? And you hardly hear anything about it anymore. It's just dead.
Yeah,
So yeah. Again, I think the software story is still intact, but you have to look at specific software, right? Some
correct.
softwares are probably
Exactly.
just like
Yeah.
I,
Like
you know,
I don't know if I'd be in a buyer of Adobe. Adobe is one business that I just don't know. Like I just no.
yeah, I don't know if they're gonna make it, but
Yeah.
they're still
So,
a very good company. I mean, they
oh
still
yeah.
are a reputable name and all that stuff, but they have to figure it out basically.
Yeah.
They
I think
have to
that
figure
they got to go through a rebranding and they got to find new product.
Yep. Yep. But overall, I mean, the software story is, I think, it's making a comeback, but it's going to be very concentrated on a specific stock. The IGV ETF is a very good one to look at. If you just put the top 10, look at which one has the highest holdings in those, and those are the ones you follow. You just mentioned all of them: Oracle, Microsoft, Crowd. Some of those, like we already just mentioned all of them. So keeping an eye on those will definitely um, put you in the right place. But let's move on to NVIDIA's, man. NVIDIA is open source model light fuel for quantum stocks. If you guys are not paying attention, quantum stocks has been moving like crazy. Um, and all of that is because, again, this is just one of those things that I feel like every time we talk about something, it doesn't take too long as long as we think it's gonna take. You know what I mean? Whenever we mention like whenever you mention nuclear energy, all the nuclear stock goes up. Whenever you mention quantum, all the quantum stock goes up. And those are the things that we always talk about, right? And Jensen Huang has been playing games with everybody because he literally said, "Oh, we have about 5 to 10 years before we see." Like, no, no, this man is not gonna just tell you guys wait for 5 to 10 years. Nope, that thing is a reality right now. So, again, go look at IonQ, man. I don't even know, like, man, that like the last 3 days. Just look at it. It started on Monday, Tuesday, and today. Like that stock went from 28 around there to like 43 in 3 days. How do you move 50 almost 50%?
Let me give you some other names. QBTS in the last
QBTS.
week. In the last week, it's up 52%. IonQ is up 44% in the last week. QUBT, quantum computing, is up 40% in the last week. SoundHound
That's
AI is up 11.99%. So, oh yeah, this is Rigetti. Rigetti is up 30% in the last week. So, and we're not even at a phase where like these companies like have a commercial product yet,
yeah,
but we all know that that's the next phase of artificial intelligence is
yep,
quantum.
yep.
And it sounds like NVIDIA has now given quantum its stamp of approval, right? They're actually having a quantum conference in at the NVIDIA
That's
the
crazy.
the NVIDIA site, I think next week or this week. Yeah, it's a whole quantum conference where they're just bringing in people into space and talking about that. So I don't know. It's just so funny because I remember what you were talking about when Jensen Wong was like, "Oh yeah, this is like 10 years down the road, right?" Psych.
Jensen is lying, man. There's ain't no way that man is too smart for him to say this thing is 10 years out. You know what I mean? He is way too smart for that. And as you know, if a technology that's actually going to be part of the whole AI movement, or the AI is going to actually help build the next phase, and you are in that sector, why would you tell people like, "Oh, we already have it"? Like, no, you're going to try to deceive them, but at the same time, you're working on something bigger. So I'll cut whatever he said by at least 75%. I think in the next 2 to 3 years, we're probably going to see some type of quantum computing product coming out, or some type of chips that NVIDIA have designed that will support quantum computing.
Mhm.
Something they're going to put something out in the next 2 years. And it's they are going to be the leading also in the quantum computing, because if you can secure that every single AI product is built on your chip, and you can secure that every single quantum computer is built on your chip, you basically secure the next 100 years of your company's life until somebody comes out with some super quantum computer. I mean, that's also probably is in the works somewhere, but the next 100 years, you just secured your company's legacy.
Yep.
You know,
And my only thing with the quantum space is, do these smaller companies get bought out,
they're gonna get bought up.
or do they continue to grow? Because remember, when it comes to quantum, there's some bigger companies out there that are in that space too, like Google.
Yep.
Like
Google's in
Google's in that
there.
space.
IBM
IBM
probably in there.
IBM is
Yep.
in that space.
Hmm.
Microsoft is in that space.
Yep.
So my question is, if these smaller companies, right, do you continue just to allow them to grow, or do they get absorbed by some of these bigger players who are also
Yep.
in that space? So
Yep.
we'll have
Yep.
to wait and see. But I would not be surprised if we start to see mergers and acquisitions with some of these companies.
Yep.
Because again, as a small company, probably have limited resources, right? And
Yep.
if someone
Yep.
comes up and makes you a pretty good offer,
You'll
you
take
know,
it.
you
You're
might
gonna
take
take
it.
it. Yep,
So,
yep, yep. And I think it makes more sense, right? So instead of somebody like IBM or Microsoft actually going out and building a quantum computer product, if they can work with some of those smaller companies that's more agile and able to build those products a lot faster, not relying on different, all they need is the boost of cash flow, boost of resources to
mm,
get them there faster. They will buy those companies and just, throw a bunch of money at these guys and let them go to work.
yep,
And that's all you need. I mean, that's how companies become so giants right now. Just buy all the smaller companies. So I think that's definitely a possibility in the next near future that those smaller companies will be bought out.
yeah. And I think that NVIDIA has started to change the narrative about being just a chip company and a GPU
Yep.
company.
Yep.
I think that, they're literally, as they're building this whole AI thing, they're literally starting to reinvent themselves.
Yep. Yep. Yep.
So shout out to them for having the foresight of, just being ahead of just about everything, because
Yep.
they're not playing catch up to anybody. Everybody seems to be playing catch up with them.
Trying to catch up
So
to them. Yeah. Yeah.
yeah,
They definitely have some of the brilliant people, man. Like the world is their experiment now because they found their lane and they're gonna stick to it.
yeah.
So and we shall see, man, the domination of NVIDIA over the next few years. Let's move on to all birds, man. How do you go from all birds making shoes to AI company? I mean, you guys go look at that. Go look at that company. It went from making really good shoes for men, women, and all this stuff, and all of a sudden they announced that they are going to be an AI company. Now, how is that even possible for a company to switch their business model like that? If you guys think about it, there's one company out there that pops right into mind. They've been buying a lot of Bitcoin. They haven't really been selling software.
Oh, MSTR.
I mean, think about it. They went from selling software and selling actual product to be like, you know what? We're gonna pivot into this and start buying Bitcoin, right?
Riot Blockchain is also another company that did something very
That's
similar.
another one.
That's
Yes.
another one. That's another one. And I
Yeah.
also think Kodak did the same thing
Yeah.
a couple years ago, if I'm not
Yeah.
mistaken.
They went from like a $2 stock in one day to like almost $10, $20 in like it's in a matter of hours. You know what I mean? And they haven't really done anything after that.
I mean, this just seems so. I mean, this looks like BS to me at the end of the day. That's what I'm gonna call it, because if we're not mistaken, we're talking about a stock that was down 99% since its IPO. I think
Yep.
it did do a reverse stock split. And they filed for bankruptcy. And I think they were getting bought out for 36 million after they had a valuation of something over $1 billion.
Hmm.
So shareholder value just went to nothing.
Yep.
And now they say that they're an AI company, and all of a sudden the stock moves up on over 700% in one
One day.
day. One of
Yep.
my homeboys texted me. He said from shoes to GPUs.
GPUs.
And it doesn't make sense.
No.
And I'll be honest with you, this is just one of those things that you see, like the whole GameStop thing, and it just doesn't make sense. Like it
Yep.
doesn't at
Yep.
all.
Yep. Plus, you got to think about it. There were probably a lot of short need to cover their
That's
position
true.
anyway.
That's true. That
You
is
know what I
true.
mean?
That is true.
So that's not all just investors all of a sudden get excited about buying this. This is probably like, oh shoot, we got to cover our positions now to see, to make sure that we don't get, charge out of it. But other than that, man, I don't see just because you announce you're going to be an AI company now doesn't mean that all of a sudden you figured it out. Like,
No,
what do you mean by AI company? What kind of AI you're going to be doing? Like, those details haven't come out. You know what I mean? So for me, this is like a temporary move, probably, unless if they come up with like, oh, we're actually going to be involved in like quantum computing and AI, something big, right? Because there's a lot of AI companies now. You know,
my question is, where do you even have the resources for that?
I don't
Like
know,
your
man.
company just your company had no value.
Yeah.
Your company had no value. And I'm looking at the data here. Only 18.78% of their float was short as of the end of March. So I don't know, man. I don't know. That's crazy. Go look at Avis. Go look at Car. Go look
Mm.
at that chart. And that don't make no sense either.
God dang.
You
What's
see
wrong
that?
with Avis?
Bro, I have no idea.
Dang.
It looks like a short squeeze, but I don't know what the catalyst was.
Joe, it was $100 in March.
Now it's what, over 400 now?
400. Whoa. I am curious, like what happened? That has to be a short squeeze because there's no
Yeah,
way.
yeah. Short squeeze. But I don't know what the catalyst for the short squeeze was. Because if you go look at their last earnings report was abysmal. It was terrible. It was terrible. Yeah. Allbirds went from a $2.2 billion IPO to a $39 million flop. And now all of a sudden the stock is up 600%.
That's nuts. That
And
is
when you see a
absolutely
stock that's
nuts.
up 600%, and then you look at the all-time chart and it's still down 96%, that just tells you how bad the company was.
Yeah.
Like even with this move, if you bought at the IPO, you're down
You still you
96%.
still you're still not making money.
But I don't know, man. I feel like it's just fraud. It's fraud. I feel like somebody got to go to jail, man.
This is nuts, man. This is
Crazy,
nuts.
crazy. And that's just again, sometimes you look at the stuff, some stuff in the stock market, like all-time highs during a war, like some things just don't make sense. And I stop asking questions.
Yeah. Yeah.
So
That I don't know. I don't
yeah,
know.
I can't.
Only time will tell what's happening with this.
Correct. Could be a pump and dump. So
Yeah. 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 Let's move on to Disney and Snap, man. I mean, I feel like this story is like we talk about this every week now. The more and more layoff when it comes to those companies. Disney just announced they're gonna lay off some people. I don't know, I don't know if they say what sector or what part of the company that they're gonna lay off, but
yeah,
Disney's gonna lay off a bunch of people.
they said 1,000 jobs across marketing, studios, television, ESPN, technology, and some corporate functions.
E-
And then Snap is laying off about 16% of their staff, about 1,000 jobs, while also closing more than 300 open roles. So we can,
Automation.
yeah, we continue to see um, layoffs, right? And this is another reason why I always like to make it clear. The stock market is not an indicator of how the economy is doing.
Mm-mm.
It's not. Because you have to remember that most of the money that is in the stock market is institutional. It's not retail. From a retail's perspective, and you also have to understand this, most of the retail people that own stocks in the market are wealthy people.
Mm-hmm.
Like most Americans don't own stocks. Most do not. So when you see the stock market making all-time highs, don't get that twisted with the economy is doing well. Because one thing you don't see is you don't see layoffs in a good economy.
Mm-hmm.
You really don't. So we're starting to see layoffs again with big names, right? And people having to pivot to other roles and things like that, which is another thing why we've been saying this is why I kind of don't like B2C companies. I really don't like companies that are depending on consumer consumption.
Mhm.
I personally just don't. Like Nike, I can't. I can't do Nike. And I'm not saying that Nike won't or can't recover, but that's just an area where I'm just not, I don't want to be a part of. A lot of the spending that we're seeing is coming from B2B businesses and their build outs, right? They're not trying to spend a lot of money on salaries. They're trying to reduce salaries, if anything.
Right, right.
So, when do we start to see that show up? I kind of guess that we already have, because if you look at GDP, first quarter GDP, that mess was what, 0.5%? Over 60% of GDP is what? Consumer consumption.
Yep, yep.
So we've seen a drop in consumer consumption in the first quarter of this year. We'll have to wait and see what the second quarter holds. But, you know, everybody ain't doing so well out there. Like, if we being honest,
Yeah.
so I don't like sometimes when people look at how well the stock market is doing. They talk about, oh, the economy is strong. I wouldn't say that.
No,
No,
no, no. I mean,
no.
one of the people that I kind of disagree was Kevin O'Leary. I mean, if you guys know who Kevin O'Leary is, he went on, I think, on Fox News or something, and he just kept saying like, well, the stock market is doing good. The stock market, the S&P is sitting there, the SP. Like, I was like, dude, like you kind of like what you just said. The stock market is not an indicator of how good your economy is doing
No,
or how good your people
no,
are doing. That
no.
is not a good indicator at all.
Nope.
It's a good indicator that certain companies, people have money to invest in certain companies.
Hmm.
And as we all know, the stock market is not ran by, individual investors.
No.
Stock market is mostly ran by the institutional big money investors. I mean, that those are the people who drive the market. So you
Yep.
can't really take that as a measure of how good the economy is doing, because not everybody participating in that, but everybody
Nope.
participating in buying food, everybody participating in trying to get a job, everybody participating in trying to feed their families. So that's how you can measure, like, okay, how good are we doing as an individual? And to see those massive layout that keep coming, and the scariest thing for me is it's this massive layout is not based on that companies are not doing good. It's based on companies coming up with a better way to not have people do the jobs. So
Exactly.
you go from 100 people doing one job to maybe 10 people, because they don't need the 90 anymore. They can automate that job, and 10 people can manage all doing all the rest of the work. And this is it's to be honest, it's a lot more scarier because the economy is not doing as well, right? Companies, they're not losing money, but they're not eager to hire anybody either, because they can make more money for their investors with less people. I mean, just think about it, like, why, as a business owner, if you can make more with less, why hire more? I mean, this when it comes to business, it's like some people, some ethics is not found in business. Ethics is found in, like, your local gym membership or club or whatever. But when it comes to business, it's all about money. What is going to increase my bottom line? That's it.
And the thing that we'll have to wait and see is the companies that have done the biggest layoffs, Amazon, Oracle, PayPal, right?
Mm-hmm.
When they start reporting, what we'll need to look at is, do we see a drop off in revenue?
Yep.
So that's one thing. All of these companies that have had major layoffs over the next 2 quarters, look at the revenue numbers and see if the revenue numbers fall off. And if the
Mm-hmm.
revenue numbers don't fall off, I mean, I wouldn't be surprised if they're having conversations like, maybe we should lay off more people.
Yeah.
So that's what I would be watching is, do those numbers like start to drop off?
Yeah. Yeah.
And like I said, when I look at the economy and I think about the economy personally, I think about your average person, right? That's what I'm thinking about, your average person. And when you look at higher debt balances, lower savings rates, people losing jobs, that tells me that the average person may not be doing as well as everybody thinks.
Yeah.
Fortunately, again, unemployment has not gotten to a point where things have gotten really bad because 4.4%, 4.5% unemployment is still pretty good.
Hmm.
It's still pretty good. Um, but another thing that I'll also say is this, and I don't know how other states work, but I know in California, after 1 year of unemployment, you're not able to collect unemployment past 1 year.
Damn.
I don't think you are. I could be wrong. But from what I understand, after a year, you can no longer collect. So are people who've been unemployed for more than a year just dropping off the system and making things look better than they look?
Hmm. Yeah, maybe, maybe.
That
I
could
just, I,
also that could be a possibility.
yeah, I just can't wait to see how many more people are gonna hit the unemployment line,
Yeah.
after a while. Because
Hmm.
just because Oracle is, laying people off, whatever, they're probably giving them like 6 months severance or whatever. So these people are probably
Correct.
like,
Yeah, yeah.
I'm
They
gonna
can
chill for yeah, I'm
yeah,
gonna
they
chill
can
for a little bit, not necessarily worry about a job. But then even if I'm applying after 6 months, if I don't find anything, I can always get unemployment, all that stuff.
hmm Yeah.
So
So, like I said, I am not in the camp of the economy is doing well. I'm in the camp of I think things are okay, but I think there's a bifurcation on who's doing well and who's not doing well. I
yeah,
think there's a big bifurcation there.
yep,
So,
yep.
and I think fortunately for some names like Target and like Walmart, what they have seen is that they have seen some of the higher end consumers start to shop where they
Mm-hmm.
usually don't shop. Like, instead of going to Whole Foods or Trader Joe's, going to Walmart or
Yep,
going to
yep,
Target.
yep,
So we'll see how it plays out. But like I said, I am that is the one part of this whole rally that I'll say I'm not exactly sold on yet, personally.
yep. I would say, but one company that's probably doing the opposite of all the other companies that's actually hiring more people rather than firing people is IBM. So IBM actually committed
Mm,
that they're going to triple their U.S. hiring in 2026. They're most
mm,
targeting like Gen Z, like people who recently graduate, to fill roles that designed for more AI collaboration rather than just like routine tasks, right? So their strategy is like, let's build future talent right now, the pipeline right now, rather than like cutting costs and to alleviate short term. Let's actually hire more young people, put them in those roles, get them educated in our system, so that way by the time we really need them, they already have the talent they need. So right now, after that, they don't really have to go like kind of fight and go poach somebody else from different companies to kind of come work for them, but they're gonna have in-house talent they're actually gonna be able to hire. So
mm.
again, they're doing something different than anybody else. Is that going to work? I don't know. IBM is known to sometimes jump the gun a little bit. So I don't
Yeah,
know. We'll see what happens with them, but that's their strategy is let's build that pipeline right now rather than following the suit of like Oracle and firing everybody. So again, it's a good strategy, and is it going to pay off in the end? I don't know. We shall see. But they definitely are doing the opposite of everybody else.
gotcha. And I will say, if it don't work, trust me, if the shareholders aren't happy, they're gonna have to pivot to something
They're going to
completely
have to
different.
pivot to something else. Yeah.
So
Yeah.
always have to understand public companies, they answer to shareholders first.
Yep. Yep. They're
So,
definitely at the mercy of their shareholders, which
yep.
is again, as I mentioned, is that's they have to protect their bottom line.
Hmm.
Um, Otherwise they can't really make business. The point of business is to make money. So if you're not making money, is a problem, right? Let's
And
move on
yeah,
to this economic calendar for this week, man. I think tomorrow we are getting some initial jobless claims. Gonna see if anything crazy is happening. Friday, not no big news. Christopher Waller is speaking on Friday, but nothing crazy is happening. Next week, however, I thought we have PPI coming up.
we have
Mm,
PPI this week.
This week, yes, we have
Yeah,
PPI, and that
we have
already
PPI.
happened.
That happened this week. Yep. And that actually didn't look pretty either.
Yeah, yeah,
If we being real.
yeah. But over the next couple of weeks to the end of to the end of April, we don't really have a lot of big news that's coming out. So I guess we will just keep an eye on what's going to happen in May. with that being said, man, I know you talked a little bit about the rally and other stuff. Going over this next week and the week after, what would you advise people to do and not to do as we are heading over to the almost the end of the month, man? This is like the 15th already. So yeah.
I would just say don't get overly excited. Um, like I said, I am not an expert on global conflict, but at least what I can tell is that the conflict has not been completely resolved. So at the end of the day, anything can happen. Like anything can happen. So don't get overly excited. Risk management, especially overnight risk management, becomes very, very important if you're trading overnight. Because, like I said, you can just wake up one day and Iran did something or the US did something. Like you just don't know.
Yep.
Um, but no news is good news. So I will be as optimistic until things change. So that's all I have to say because like I said, if you told me and said we'd be at all-time highs on April 15th, 2026 after that war started, I'm telling you, I would have drug tested you, I would have called your mom, I'd have called your friends and be like, is blah 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 okay? Because
We're doing an intervention.
yeah, it'd be an intervention. But man,
Oh man.
and I will say this. This is one of the reasons why it's not a good idea to be jumping in and out of the market
Hmm.
based on headline. I will say that maybe you change your aggressiveness of how much you're buying or your allocation if you need to, but jumping in and out of the market, going from in the market to cash, like that's no. Mm-mm.
Yeah. Yeah.
Stay invested.
Yep.
Again, maybe you're saying, oh, when things are down, maybe you're getting a little bit more aggressive when you're buying some of these names, right? You're keeping a little bit more dry powder out there. When things are toppy, maybe you start to cool down a little bit, right?
Yep.
So we talked about this in many shows before, right? Like when the Liberation Day was happening, we were like, man, if you got a 401k or you got an automatic, savings plan, bump up your contribution.
It's time to do it. Yeah.
This is time to do it, you know? And then when things start to get a little bit toppy and we start getting back to those all-time highs, you don't stop. You just maybe you put in a little bit less, right? And then when
Yep.
things kind of come back down again and you see a correction or you see a buying opportunity, then you get a little bit more aggressive. So that's what I would be changing. But I would not be saying, oh my God, the market is down 10, 15%. I'm going to just jump out.
Hmm.
You know, I can't see now. If you need the money in a short period of time and you can't absorb any more losses, I can understand that. But I would also tell you that money probably shouldn't have been in the market anyway.
Yep. Yep.
The market is not designed to be a short-term get rich quick scheme. It's designed to be a very long-term compounding engine over time because that's how you get the best results and that's how you um, increase your chances for success.
Yep.
Like if you're a new investor and let's say you started investing in March of this year, you're gonna be like, man, this is a scam.
Yeah. Yeah.
You'd be like, this
Yeah.
is a scam. This is crazy. I would never put money in the stock market. And then you
Yeah.
get out,
Yeah.
right?
Yeah.
So
Yeah.
always a good person said, when in doubt,
Zoom out.
zoom out.
Hmm.
So
Hmm. But
those are my
I also feel like everybody needs to go through. And somebody said this before when I started trading back in like 2019, 2020. Is that like everybody needs to go through a full cycle of craziness in the market for you to
yep,
understand exactly how the market works. If you
correct.
can sustain, if you can maintain, if you can survive going to a full cycle of craziness in the market, you will know when those stuff happen in the future, you'll be more prepared. But you
Yep,
have to go through it. You know what I
correct.
mean?
You got to go
And
through it.
yeah. So again, stay in the market. Don't get shaken out. I promise you, it always makes sense as you stay longer and be able to focus more. But you also got to be smart. Don't blow your account. You know what I mean? So
Yeah, that's
make sure you
true.
stay smart. Or you can always come listen to us and join our team and join the group. Get
Man,
full analysis from us.
man, we've hit some good trades this week, man.
Yeah.
We hit. I
Yep.
mean, Planeteer was a nice one. Even some of the day trading scalping that we've been
Yep.
doing.
Scalping was
I
good.
mean, some of the scalps. I mean, granted, I sold some of them early, right? Like I didn't catch the entire move on QQQ today. Like I didn't catch the whole thing. I had to leave early in my day early. And I think I sold like around like 90 something percent. Where I came back and looked at what those contracts are worth that I sold. They're well over 200.
Yeah. Yeah.
So, our goal is just to give quality information, help guide you through the process. And then again, declutter all the headline noise that just let's focus on what really matters.
What really matters.
That's the whole point of
Yes.
this show is focus
Yep.
on what really matters.
Yep.
And you can go fact check us if you go look at our track record. Been pretty.
Yeah.
I will admit one that I got wrong back in 20, was it 24? I think 2024. TLT. I got smoked on TLT
Yeah. TLT
because
was.
when they started cutting rates and the long end started going up, I was a little bit surprised by that. I did not expect that. And TLT, I got TLT wrong. I took a pretty good loss on TLT, but everything else
Everything else
worked
been good.
worked out pretty good.
We can't be perfect, Wilder. We can't be perfect.
Oh no, you cannot. You cannot. You cannot. Sometimes those L's, man, they bring you back to earth.
Oh yeah.
And it's all part of the game.
All apart.
And
As
when I'm wrong, I always tell myself, you know,
This is
Mark
part of the
Zuckerberg
game.
Mark Zuckerberg got reality last month. He got that
And
wrong.
he lost a lot more money.
He lost a lot more money than me. So that helps me sleep at night.
Oh man. With that being said, don't get shaken out the market, man. Stay in there, stay consistent. That's it for today's episode of the Wall Street Rundown. I'm your co-host, Billy. I got Wale with me. Please, you guys stay locked in, stay informed, and as always, man, trade smart, invest smarter. And we'll see you guys on Friday for another episode.